Hi guys, it's Ian Coleman. It is the 29th of April 2021, about 10 to 11 in the UK. I've taken a short euro dollar trade this morning, and I want to explain in this video why I've come to that conclusion. Let's get to the chart. I'm going to break down time frames, so we're going to look at euro dollar in the monthly chart, the daily chart, all the way down into an intraday chart. I'm then going to talk about single currencies, strength and weakness, and then lastly I want to look at the US 500, which is the S&P 500, as I believe we might have a top in formation there, which would give the safe haven US dollar a bit of a boost to the upside after this prolonged move lower. So euro against the US dollar, this is the monthly chart, trading view charts. I believe that the long-term bias is still to the upside. So here we look to be forming a Gartley formation, and I think that we're in this leg here, CD, but there's ample scope for a move to the downside without ruining this long-term bullish bias. If we go to this time frame, and again, it was quite an isometrical pattern that formed here. This is a butterfly formation, confluence area. So basically, if you are unsure about symmetrical patterns or Cypher patterns, what we're looking for is confluence areas of fib levels. So here we've got a 161.8% extension of this move, and it's also an 88.6% pullback of this move. And with the first wave, or the AB wave, stalling close to this 50% level, that has basically made a butterfly formation. We were a little bit short, but we've had an aggressive move now to the upside. Doji style candle forming today, I hope, and to push this this currency pair lower. So this is the 8-hour chart. This is what I'm looking to play out next. So I'm basically looking at a butterfly formation, and I'm trying to catch this leg to the downside. So this BC leg, this BC leg will often retrace 78.6 or 88.6 of the AB. So if you catch it correctly with a stop above the swing high, the risk against reward factor is substantial for a potential move to the downside. If we go to a shorter time frame, this is the last time frame. This is what I believe has happened. There could be scope, just looking at the baskets, just for maybe a little bit of a last-ditch attempt, if you like, to attack this 121.53, 121.60 area. And again, that would form another Gartley formation. But looking at the currency baskets, especially the dollar index, I believe that they have now completed, so I am starting to fade this euro dollar move. I am short. If we get back up to these sort of levels, I will be adding into my short position. So that's the breakdown in euro dollar. Let's have a look at the single currencies. Okay, this is the euro as a single currency, and this is basically what I believe is going to happen next. So again, we've moved up to a 78.6% fib level, and I'm trying to catch this move lower, this BC leg in the euro, so basically giving me a negative euro bias. If we look to the dollar, and this isn't, I should say, the dollar index, it's not DXY, it's a combination of dollar denominated currency pairs which are overlaid on top of each other, and basically I'm now looking for this leg. So I'm looking for a BC leg lower in the euro, and I'm looking for a BC leg higher in the dollar, which is obviously giving me that euro dollar bias. Lastly, I just want to look at this US 500. Got an interesting chart here this morning. This is only an intraday chart, but again, I've got a nice bearish symmetrical pattern completing between 42.12 and 42.17 on the US 500, which gives this a downward bias. So that negative bias on stock indices should result in buying in the US dollar, as it's a safe haven currency. Okay, guys, I hope you've enjoyed that analysis, and I'll be back again soon with some more. Many thanks.